Welcome to Vicki Bergdorf's Small Business Instructional Videos. My channel is designed to help you out if you are a new entrepreneur, a small entrepreneur. Maybe you've been at it for a few years and you're just kind of at a point where, maybe I should seek out some help. Maybe I could be doing things different. We try to, at this channel, come up with topics and ideas for ways to make your life easier as a small business owner. So, the topic of this video is going to be about receipts. Why you need to have them, why you need to keep them, what the latest tax tribunal is saying. So, I know that there's some controversy going around about, well, if you have your statement from your credit card or your bank, you're covered, don't worry about it. Well, that's not really the case. That is false. Very, very much false. The tax court had ruled a whole bunch of people into a bad spot last year because they specifically said if you don't have the receipts, only the statement, it doesn't count. It becomes an owner's draw, taxable income. So, that being said, receipts are key. Most of the softwares we work with, the ones in our office we work with, there's Wave and QuickBooks, and they have an app that you can put on your phone that links right to your QuickBooks or your Wave that we work with you, and you can take a picture of a receipt, scan it right into the app. You can open up the app, take a picture, it goes right into there. Whoever's helping you with your books, whether it's you, a spouse, a bookkeeper, a tax person, I don't know who's helping you, whether it's me or someone else, but it goes into that, and then you can categorize it from there in a PDF or picture version, which PNG or whatever type dot blah 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 the scan or taking a picture of makes it become, is now something that can be attached into the software for safekeeping. But now the next question, do I still need to keep the receipt? Yes, you do. I know we want to go to a digital age. I would love to go to a digital age. My office, we love it when clients scan their receipts into the apps. We then take that scan and we try to make sure that if we're the ones doing your books and you're not doing it and just kind of having us look at it, if you just have us look things over, we don't do this for you. But if we're doing the full service, we then take that picture that you put in the app or you texted us or you emailed us. We make sure it's in the accounting app and our separate Google Drive that we keep everybody's stuff in, and we print it out and put a copy in your file. That being said, if you lost the receipt or it got damaged or destroyed, not the end of the world. You've got a backup from us that you can show the IRS should you ever get audited. What are my likelihood of getting audited? Quite high now that they've got that new money and they've hired all these new people. They're coming after the small business people first. We're the first realm of audits. So be prepared. And one of the things that the tax court specifically said, especially when it comes to receipts for stuff at the gas station or Walmart or a place that you could buy more than one type of item. If you don't have the receipt, you can't prove that it was a business expense and not something for you personally, or that wasn't an allowable expense. So let's explain that a little bit. Now, if you go to the gas station and you put gas in your car or vehicle or whatever you're driving or whatever, the gas can for the lawnmower or the gas can for the chainsaw or whatever the equipment is that you're putting gas in the gas can for the business use. If you have that receipt and you have, written on there that it says chainsaw or lawnmower or weed eater or kerosene heater for doing, I have clients that do mason work and they run a kerosene heater in the winter to be able to do their winter masonry work. So there can be a very valid reason, but without the backup, the receipt and a note of what that was for. I mean, if you only spent $8 on gas, a lot of times my office just throws that into owner's draw unless we know that's what you're doing. So keep those receipts, make notes, and make sure that you always keep your person who's helping you out apprised of what those small expenses are. If it's small, we assume you went at the gas station and got pop and something to eat, and that's not an allowable expense. food items, as you saw in the other video, has to be at a true restaurant. Gas station, convenience stores, and grocery stores, food does not count unless you were going just to buy coffee, orange juice, and donuts of a large quantity for some kind of meeting. Now, that we can do. That's not meals. That's a different. We run that under a slightly different category so that it's more allowable. It's like a team meal, which would be not a meal, not and entertainment is not allowed. So it would more go under marketing because it's a marketing item instead of a meal. It's more to get people's attention, want to be there, show up, pay attention, follow along. So that's marketing. That's not meal. That being said, the other reason the IRS says you could have a $65 receipt from the gas station, and how did they know that you didn't buy a carton of cigarettes or 2 12-packs of beer and 5 packs of cigarettes? They don't know that, and they're going to say you don't have the receipt. Gas station does. You have to have the receipt. Now, I've had that happen where, they're going down, they get the receipt, they go in the car, the windows are down, it's a busy day, they're trying to get somewhere and they're running behind, and all of a sudden, that receipt they just had flew out the window. Okay, that instance, as soon as you get where you're going, stop, write down as much as you can remember. I went to the Shell station on 1st Avenue on January 14th, 2024, got fuel for Dodge Ram, and the dollar amount. Try to remember the dollar amount. If you don't, give it to somebody who can look up on your charge what that was. A lot of times if you hurry up and write that up and you make a note, receipt blew out the window, and you only have that once in a year, they'll probably let that go. But if it happens to you all the time, they're going to go, nope, you're playing a game. We're not going to let you have these. So you do need to slow down a notch and try to hang on to them. But in a pinch, do the best that you can. Try to keep those receipts. The other thing they say is if you're going to Walmart, they don't know if you're buying groceries. They don't know if you're buying alcohol. They don't know if you're buying your kids' clothes. They don't know if you're buying fishing lures to go fishing instead of going to work that day. They can't distinguish that. So without the receipt, it's owner's draw. Period. You just got to pay tax on that. So keep the receipts. It's essential. There are reasons for it. They've changed the rules. They've changed the laws. The tax code is very specific now. If you don't have them and you try to claim them and they audit you, you get double taxed. And by double taxed, I mean they're going to turn it into an owner's draw and you're going to pay the tax on that money. Plus the penalties and interest for not doing it right the first time are at least as much as the tax you have to pay, if not more. So it can be even more than double tax. I call it double tax because between the tax you owe and the penalties and the interest, it's double what it would have been if you would have done it right the first time. If you lost the receipt, you can't prove it, you just claim it as owner's income. Or if it wasn't a viable expense and you can't prove it and you're trying to slicky one through, it can get expensive, especially if you forgot you did it 12 other times earlier in the year and they were expensive ones. You could get hit with some pretty... And then if they find too many, it's willful negligence, and that fine is even more severe. So plan the rule that all of our, generations before did with the IRS when it was not as well staffed as it is now. We didn't have people auditing like we do now. And the tax code was different then too. A lot more stuff was just allowed, and now it's not. So save the receipt. It's essential. Statement is not enough. The statement is nice. It is not enough. So if you have any other questions, reach out to your tax person. Reach out to my office. Subscribe to this channel. Make sure you keep up on my latest videos. You can see at vbbookkeeping.com. My channel is listed right up in the upper right-hand side. So if you've lost your place and want to come back again, just remember vbbookkeeping.com. This is Vicki Bergdorf. Have a great day.